All right. Welcome, everyone. Sorry, a little bit late, little technical difficulty there, but we got it. We're here. Good evening, everyone. We are live. Thank you, everyone, for tuning in. We got the chat up there, so you can go ahead and drop a comment there in the chat. Saw some people were in the chat there before we went live as well. All right. Hello, Sonia. How you doing? So thank you, everybody, for waiting. What we'll do is we'll just hang on just a couple minutes here. It takes us just a couple minutes to go live on all the different platforms, and we'll give everybody a chance to jump on as well. But thank you for tuning in. Thank you for being early. We appreciate it. All right, got some more comments coming in. Hello, everyone. Michael, Adam, Alex, the Mortgage Calculator team. We got something real special to go over here today. Something that even a lot of the Mortgage Calculator team members might be not necessarily familiar with how it works because it's such a strange but amazing program. So, got some cool stuff to get into here today. So thank you, everybody, for checking in here. All right. Looks like we're live, so we can go ahead and get into it here. All right. So, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. So, every Tuesday, we do this loan officer training, and today's topic is going to be how to structure the no ratio primary home loans. And I'm going to let Jose actually this time take it from the very beginning as far as explaining what this program is and how it works. So I'm going to kick it right over to you, Jose, to talk about what is a no ratio home loan for a primary residence and what kind of program offers that.
Absolutely. No ratio. Well, we should really call it a no job loan because no ratio would let you believe that somehow or another they're actually verifying some type of job and just not calculating any income. But in this case, what they're really doing is, hold on a second here. What they're really doing is just letting you, as long as you meet the guidelines of down payment and credit score and reserves, then you can do this deal. So basically, the main thing to consider here is it's only 80% max loan to value, right? You can't do this any higher. They had briefly pre-pandemic, they had an option that you could combine a HELOC with this product, but that was pretty much eliminated. So now we're looking at 80% down. Now there's many creative uses for this product. This is available only for primary and second homes. This is a program only available to U.S. nationals, whether you're a citizen, whether you're a resident, or whether you're a non-permanent resident alien. You need to have status here in order to get this loan. So 12 months reserve is the minimum. Credit scores in the 700s. You'd have to run it through the pricing engine to confirm. Now, in the example, in the examples that I chose here, we're figuring, top tier credit. We're figuring 800 credit, and then I ran some purchase scenarios, and then I even ran a cash out scenario, right? So you can even do cash outs up to a 70% loan to value with this. The main thing to consider here is, where would you use this product, right? I mean, we can't just be indiscriminately letting, like just throwing it out there all over without using some judgment as to, is the borrower really going to be able to make the payment, because just because you can doesn't mean you should, right? So, I mean, if it's like a borrower that, they happen to have great credit because they've managed it well all their life, they managed to have some savings because they scrounged all their life. Technically, they got the down payment and the reserves, but if you know that there's no way that that individual is going to be able to make the payment, you got to really consult them and find out how they're going to pay. Is it that another family member is living with them that's going to pay? I mean, you really want to sort it out before they close on any type of loan like this, because it is a great option, um, but it has to be used with responsibility. So, excuse me. One of the ways that we use this product, for example, Nick has used this product a few times with his crypto buyers. Buyers that have plenty of assets. They have cash flow. Most of them are self-employed in one way or another, not claiming all the income that they're making, but they definitely have cash flow and down payment, good credit. So he's managed to use this loan a few times for his crypto buyers, nice large loan amounts. So that's a creative way. Another way you could use this product, let's say you have, management type person, changing jobs, relocating from, let's say, New York to Miami. They don't have that new job yet. They have a lot of options or interviewing, but they found this great property and they want to close. They want to move. They're serious. They're coming down here. No ifs, ands, or buts. So they could relocate as long as they got the 20% down, the 12 months reserves, the credit. They could relocate, move into the new spot, get their job, and then down the road, when they're ready, and if they so choose to, and if the conditions permit, you could refinance them into another loan that may have a better rate now once they're in their job and they're situated. So, a lot of creative ways. Oh, one deal we did here, we had a U.S. national living in Colombia, right? But he's U.S. national, permanent resident, has U.S. credit, all that stuff, just was not claiming any income here in the US. But he wanted to buy a second home in Chicago, Illinois. So we were able to use this program to fund that purchase of a US national living outside the country who didn't have any verifiable income or job, but certainly had the ability to pay and had the credit, and we were able to fund his purchase with this loan. So really good options there. So for the first example, I wanted to share with you the 20% down purchase option.
Really quickly, Jose, can you
Sure.
talk about what the program actually is and who it was designed for and how
Oh,
that
yes.
works?
I'm sorry. I'm going right into the meat and potatoes
Yeah,
here.
here I'll pull that up. I got it pulled up here.
Okay, there you go, Nick. Take it away there.
So these are all going to be under the CDFI designation. So that's what Jose forgot to mention there. Obviously, there are different names at the different partners that we have, and there's different spins on it. But at the end of the day, any program that falls under this is under the CDFI designation, and it basically allows them. That is a designation by the Department of Treasury that allows a financial institution, a community development financial institution, to basically break the law, to break Dodd-Frank Act in order to serve the underserved. So here's exactly what it says, actually, here on the CDFI website. The Community Development Financial Institution Program actively works to address these issues by investing federal resources, which are matched with private funding, in CDFIs working to serve low income and underserved people and communities. So what that means for us, obviously CDFI is a pretty overarching program, has to do with, schools, federal dollars for schools, federal dollars for food, stuff like that. But a big part of it is banking. So it says here that they've done over 38 billion in loans and investments under the CDFI designation, specifically for borrowers like we're talking about, but also small businesses. They also do that as well. Basically, anything that can help those communities. So essentially, in order for a partner, a bank, or a financial institution to get this designation, they have to have a mission to serve these borrowers. So our partners have various missions there, and most of them are to serve in the financial world, in the mortgage world. We end up having to serve people of certain ethnicity. I believe it's Hispanic or African American, I believe, are the two designations that allow us the extra stuff. Correct, Jose?
Correct. And actually, there would be a little box when you're clicking around there, and I think the little box asks CDFI eligible. And if they're CDFI eligible, they get, usually it's a 0.25% lower interest rate, because that's the true purpose of the program. But they can't discriminate against non-CDFI eligible borrowers, so everybody gets to participate, but CDFI eligible borrowers get a little bit lower interest rate.
Exactly. So in order for them to use these federal funds, they must have a mission statement and a program to address these people, and obviously to break the Dodd-Frank Act, they're going to have to, the ATR rule, they're going to have to address these certain groups and do so well. So this is a designation, as Jose said, that is for the underserved. So make sure we're using it for that. It's not for people just to use just because they want to. It's for people that need it, that would not otherwise qualify, right? We're always going to make sure we give our borrowers the best loan that they qualify for. And in this case, these are people who may not qualify for anything else. And fortunately, the government has provided us this avenue through this fund, which therefore allows us to be flexible on the rules in this case. So it is a very unique situation. And it's not going to be there always either, right? It's a temporary kind of government program that probably will go away one day, right? So just keep that in mind as well.
And just to be clear, it can be used by anyone, correct? There is a ethnicity that they're targeting, right? There is people, like you're saying, Jose, certain markets get a better pricing, but it is available to anyone, correct?
Mm-hmm. Correct. I believe they do have census tracks as well, where they do better pricing and stuff. But typically for us, when we're, as far as loan officers and our borrowers, it's typically going to be that little checkbox Jose mentioned for African American or Hispanic eligible under that designation, which just immediately gets them that extra little juice. But that's pretty much it. It's a pretty general program, and as long as the partner obviously qualifies, then we're good to go. So I guess I'll go ahead and share your screen then, Jose. You ready?
Yes, sir.
All right, let's do that. There you go.
All right. So again, remember, this is no income verification of the borrower required, no job, no employment verification of the borrower required, right? So keep that in mind, 80% LTV max. So it is, not an inexpensive program by any means, but if this is the only option that anybody has to get the home, then it's certainly not expensive, right? If you can get what you need. So in this case, you're looking at 8.875% is the rate with the lowest cost, and pretty much probably the only thing you would be able to offer here. And it is at a cost of 3.25 points. So again, this is obviously 80% LTV, so no mortgage insurance is available. And then I have a 25% down purchase option. The rate goes down a little bit by an eighth. Cost goes down a little bit as well. Loan amount here we're talking about is $375,000. So not much of a difference from one to the other. What basically it's 8.75 and 3.25 points of a lower dollar amount. And now we have a 30% down purchase. So here at the lower LTV, rate stays the same, cost drops a little bit. Here, our loan amount is 350,000. So what you're looking at there is a cost of 3 points in loan discount. Now, this is a lender paid transaction, no additional charges to the borrower having to do with anything else other than closing costs and stuff like that. This is the loan discount, which is the points, customarily known as points to buy down. And then we do have a refinance option. Right, I have here for you. This is a maximum LTV of 70% on this loan option. So cash out refinance, 8.875 at a cost of 3 points. And this is, again, primary or second home only, not applicable to any investors at all. So really good options that you can do here. You just have to be aware that there is a reserve requirement of at least 12 months PITI. The reserve requirement increases as the credit score decreases. So this scenario I ran here was with the best possible option for credit and for reserves. So that's really critical. Now, reserves and down payment can all come from a gift. So this program is lenient towards gifts. So 100% of the funds used for the transaction can be a gift, but maximum LTV is, in this case, 70, and the purchase is going to be 80%. So keep an eye out for this option. Very good option. It is a wholesale option, so so that you can structure your loan accordingly.
And the cash out can usually be used as reserves. So a lot of times our people that are stuck can usually do the cash out as reserves, as long as there's a little bit of reserves they have prior to the cash out. All right, we got some questions as well here.
There you go. Ben is calling you out, Nick.
I know. Hold on, let me switch the screens.
That's right, Ben. Call him out.
We'll bring in a question here. So yeah, Ben had a good question. So a crypto zillionaire is an underserved borrower. Absolutely, guys. Remember, we can't discriminate against anybody, right? So our job is to provide solutions, and this is exactly what the CDFI allows us to do, right? So a crypto zillionaire, even though they're a zillionaire, they can't qualify for any loans, any traditional loans that we or any other bank could offer besides these CDFI loans. So that's actually exactly who we're supposed to serve there, Ben. Someone who would not otherwise qualify. That's really the only qualification, right? You're not going to use it to someone who has a W-2 for, a good amount, right? A $200,000 W-2, they qualify for any loan. They're not going to do this loan, right? It would be, against the rules for us to put them in this loan because it'd be too high of interest. And if they were really wanting it for some reason, that would be weird as well, right? We would want to put them in the proper loan. So this is exactly who it's for, is someone who would not be able to get anything else. So great question there. But yeah, we have to serve. Remember, they're U.S. citizens. That's the only really qualification there. I don't believe they offer these programs to, like an I-10 or any of those other things that we were talking about before, right? These are something that the government has put in place in order to help people who would not otherwise be able to receive help.
All right. Looks like another question. Geneva's asking, Jose, if you can go over what are the credit score and reserve requirements again.
Reserve requirements minimum is going to be 12 months. Not sure the exact credit score requirements because that really changes depending on the loan to value. But for example, if I'm checking here a minute now at an 80% loan to value, just to see if it'll do a 700, right? And I got my reserves in there. And let me see if it'll do at least a 700. And then I can answer that question for you. Choose another account. Wait a second.
And as Jose said, this is a wholesale product, right? So for those of you on the team, that's where you'll find it. But definitely something interesting. Did anything pop up out of 700, Jose?
No, sir. So nothing popped up at a 700 there. So I would tell you that it's probably going to be 720.
So it's definitely not for a person with no job and no credit, right? You gotta have
I got the
credit.
matrix. It's 640 is the lowest credit, but that takes it down to a 65, and it takes 24 months of reserves at a 640, and then there's tiers up from there, and then cash out. The minimum is 660. So I just sent one of those last night for one of my crypto people. But I was looking at this matrix here for the cash out there. So 660 minimum, and that'll keep you in the 70 LTV range. The FICOs will change the reserves.
What do you need for an 80%?
80% for, well, it depends on
12 months reserves.
Yeah, it's 12 months reserves, and it's only for 740 and above. Yep. So they're real strict on those high ones.
They used to be like 660, 680, but they tightened the reins a little bit on that product so they could keep it.
All right. Yeah. What did your crypto person do, Nick? They're looking for a purchase or a refi or what?
Yeah, I was doing the refi. So it was someone that I already put into the loan before, and their property has gone up significantly more than their crypto holdings. So they're looking to use their property instead of their crypto. So I don't feel bad about putting them into real property because it turned out well for the couple borrowers who took advantage of this program, and unfortunately lost a lot of money recently in the crypto space, but their properties have skyrocketed, right? So kind of inverse asset classes, but very interesting play that they have there. They really have no other option, right? So this is a great program for anybody that may not have another option.
Absolutely. So not only is it a tool in your tool belt now that everybody knows about this, but that is a great group of people to go after. We had one of our realtors, Eric Mendelson, come on a while back. Gosh, that was probably like 2 months ago now, right, Nick? Coming on one of our trainings and talking about how he deals with crypto clients. He does a lot of crypto real estate transactions. So that's a whole group of people. Nick's done a few deals. So obviously if you can target, cryptocurrency type events, different groups, and just let these people know that there are ways that they can qualify if they don't necessarily have a, job and income, but they have a ton of crypto down, enough to get the down payment going and stuff, then you can have something to offer them. So that's a good sales takeaway from today, right? Is that you have a target market there that you have something to talk about with them. Let's see here. All right. Any other questions then? So this was a quick one today, huh?
Yeah, it's not that much to set up an Encompass or anything. We don't need to do any technical stuff. This is you just have no income, right, and no job. So it's kind of like a DSCR loan when you're setting it up in Encompass.
Right, definitely.
It's definitely like not something we need to spend time on there because it's easier than anything.
Absolutely.
Just wanted to make a note because I noted that someone put up a comment there in the chat regarding the matrix, but I'm checking the pricer, and it basically states 740 is the credit I think that they're going to need if they are wanting to get 80% LTV.
All right. Okay, well, I don't see any more questions, so let's go ahead and wrap up today. Oh, can you close in an LLC? No, because it's for a primary home. It's only primary or second home. So the opposite of DSCR, right? You have to live in this one. It can't be an investment, and it can't close in an LLC, as opposed to the DSCR has to be an investment and can close in an LLC. All right. All right, let's go ahead and wrap it up then. Thank you, everybody, for tuning in. Kept this one short and sweet. You can check us out tomorrow on the sales training at 7 p.m. Eastern time that we do on Wednesdays. And, of course, catch us every morning at 11 a.m. Eastern time for our daily mortgage rates live show. Thank you, everybody, for tuning in. Have a great night, and we'll see you tomorrow.